Hi and welcome back to Working Dad Trader. In this video I'm going to give you an update on my January Trading 212 portfolio. I can show you what I've been buying, what I've been selling and how I'm positioning my portfolio. If you're interested in using the platform Trading 212 or you don't have Trading 212 and you want to get started in the stock market, it's quite a good straightforward platform to use. If you use my friends link below, then you can get a free share, anything up to the value of £100, and so will I. So it's a win-win for both of us. So if you want to use that, that'd be great. And also, if you do like this video, then please give me a like. It really does help my channel grow. And if you want to see more content, then obviously subscribe. So this is my Trading 212 portfolio on the 28th of January. As we can see, it currently sits at 16% up. It was a lot better than that. The end of last week, it sort of had its January highs, and the situation at the moment there's just a lot of I think turmoil in the market at the moment. It has dropped a lot, especially the last few days. Like I say, it was up around the 19% on the 26th of Jan. So it's dropped a lot in the last few days. So it's going quite well, and then obviously it's dropped back down. I'm expecting it to drop again a bit further. I think there's a lot of still uncertainty in the market. I can see it dropping today again a bit more. So, but in the long term, I can see it going back up again, and I'm quite strong. As far as my portfolio, the plan for 2021 is to slightly rebalance my portfolio and possibly have less stocks. I started to rebalance the portfolio, but I've still got quite a lot of stocks. So there's, again, maybe where I've been selling some stocks and bringing some others in, that it's gone a bit not quite where it should be. But I'm quite happy with it at the moment. I just go quickly through it. Alibaba is still not fully recovered. I bought a lot more shares on the dip on that one, and I'm very confident on Alibaba will get back because Alibaba's a strong company. So I can see that one doing well. Other ones doing well, Atheria, that one is 121% up, which is fantastic. A lot of the recent growth on that has been with the announcement that it's going to merge with Tilray and become one big company under the name Tilray, the two cannabis companies. Then it really will be a really massive cannabis company, and I'm holding on to that because of I'm going to get stocks from Tilray on the merge, so I'm waiting for that to happen to hopefully come out of that deal quite well. There's a few down. TNT is down. A lot of my UK stocks like Avon Rubber is still suffering. I bought that one on a dip, hoping for it to come back up. If I just quickly show you that one on the 3-month, I bought it down and it was quite low, and it was up quite a bit. So I think that one could be a slow one to come back up. It had a bit of a problem with fulfilling a contract, and the contract that it was trying to do was delayed. So that's the sort of why it plummeted, and that's why I bought, because I still think Avon Rubber is a good company, good strong company. So I'm just waiting patiently for that stock, if we go to the yearly, to sort of rebound to where it should be. It's got a massive growth potential. Like a lot of the UK stocks at the moment, they're not doing a great deal. If anything, they're suffering a bit. Other stocks I bought this month is Beyond Meat. Beyond Meat, I bought into that one because it came back down. It's been slightly volatile, but at the moment it's 45% up, so I'm quite happy on that. Canadian Solar is 73% up, and I've actually sold probably half my position in Canadian Solar. The simple reason is that my aim is, although I believe in Canadian Solar and I think that is the future, I want to take some of the profits off the table as they stand and just leave that as it is at the moment. I think there might be. I wanted to make my portfolio a bit more defensive, I think, more than anything, and I was quite happy to take some profits off. I can see a possible correction coming for some companies that are slightly hyped, so I just want to be a bit more defensive, and that was my reasoning. Take some profits now and just let it run a bit. So the stake that I put into Canadian Solar a long time ago is pretty much now taking my money back. So now it's just free money running, and it can. So I'm quite happy to let it do whatever it wants to do. Coca-Cola is slightly down, but not too worried about that. It's a good, strong company. Corsair Gaming, which I've done a video on. If you haven't seen that, go check that out. That very volatile stock. Corsair Gaming has been going up and down. It's going a bit sideways, but that's fine for a moment. Like I say, in my previous video, I said it's a good company, and I think it's got a good future. So I'm quite happy holding on to that for a minute. What else have we got here? CrowdStrike doing quite well. CVS Health doing quite well. Games Workshop, which is a UK company again, that I'm quite bullish on. That's been down of late, so I'm looking to possibly buy some more into that company. The financials are great on that company. I think it's a strong company going forward. So it's one of the ones that I'm going to look to possibly buy some more stock in. iShares Global Clean Energy ETF is still going well at 67% up. Another one I've bought recently is Lockheed Martin. Lockheed Martin's more of a safe defensive stock for me. It's not a massive growing stock, but it's a safe stock. It grows sort of 8-9% a year, pays a dividend, but I'm looking to, with possible up and down turmoil this year, I think you need to maybe be a bit more clever with your stock picking. Last year it was easy to just make money and they all sort of went up 20%. I think this year is going to be a lot more difficult, a lot more tricky this year. So I'm looking to just make my stock portfolio a little bit more defensive and a little more safe. If there is any type of correction in the market, people like Lockheed Martin is not going to be affected that badly. So I'm quite happy with that. Another one I bought recently is National Australia Bank, just because I quite liked the bank itself when I did some research on it. It was quite cheap, I thought, at the time. It pays a very good dividend, and I don't have a lot of exposure to the banking sector. I mean, the banking sector is struggling still at the moment, but compared to some of the other banks, I thought it was quite cheap to buy, so that's why I bought that one. PayPoint was one that I bought a while ago as another UK stock. Again, it dropped massively just to some minor news, and it's sort of gone sideways a lot for about 3 months now. It's been going sideways. There's still a lot of growth potential on that one. If we can click on that one, I can show you. Yeah, so then that's the yearly picture. It's dropped quite a lot, and it's been going up and down, up and down. It's been going sort of sideways, but there's still a lot of potential in PayPoint. Again, it's good, solid financials on that one, and it's just taking its time to recover. But I can see easily it getting back to 800. So that's what I'm sort of patiently waiting for, and then I probably will sell that one. Another one on my list that I recently bought is Procter & Gamble. Again, a good, solid, safe company, pays a dividend. Procter & Gamble is a solid company, been around for a long time, really good financials. So these are the type of companies now I'm trying to get my portfolio to hold. Some of these companies, just safe companies, where the volatility is not going to be all over the place with some of these stocks. I do hold some speculative stocks, and I'm going to try and reduce that down to around 10% of my portfolio and keep the rest in good solid companies like Amazon, like Facebook's, like Procter & Gamble, like Lockheed Martin, Union Pacific. Nice, solid, strong companies to protect my portfolio. So yeah, so that's that one. Tencent Music has done really well over the last month or so. It's gone right up to 68%, so I'm really pleased with that. I like 10% Music. They're a really good company. Again, the same as Alibaba, it's sort of waiting for what the shakeout is of the Chinese authorities on things, so that could still go up more yet. So we wait and see on that one. Like I say, Union Pacific, I've held that for a long time. The big railroad company, big solid company with years and years of history of profit making and financials to look back on. You know where you are with these companies. It's all there in their history. They're a company that just keeps making money, so that's why I've always kept Union Pacific. Pays a dividend, nice strong company. One of the really important in the States for moving goods around the United States, so I'm happy with that. And obviously, again, another one, Walt Disney, 43% up, so I'm really pleased with that. Considering none of the parks are open and they're not getting any customers to any of the parks, but their TV network has absolutely exploded, and that's why it's gone up so high. And when their parks open, I can just see carry on going up. So yeah, so I'm really pleased with my portfolio. But like I say, my aim is to rebalance my portfolio over the next 3 months, especially the first quarter of this year, trying to just get my portfolio in a bit more safe and defensive shape. Like I say, I feel something might well happen within the next 6 months. We might see quite a big drop. I don't think it'd be a bear market, but I think there's a lot of bubbles out there, especially in some of these hyped up stocks that are going to burst, and that could have an effect on the entire market. So I'm just sort of positioning myself into something a bit more defensive, because I think this year is going to be a bit of a ride, and yeah, that's my thoughts on it. Okay, so I hope you found that interesting. Like I say, that's my thoughts on the way the stock market is going and how I'm positioning my portfolio. Like I say, I'm not a financial expert, so always get your own advice and do your own research. It's just my personal thoughts on how I think the next few months are going to go. If you enjoyed that information and you like that, then please remember to give me a like. It really does help. And I hope to see you in my next video. Okay, take care.